Gold's going to have a three handle with it without ever having a below two handle in it. And with us at 2,600, 3,000 is not that far away. It's not that impossible. So I still retain a very, very bullish stance overall towards it. Gold should not be performing. I believe gold is being used again in part by people who realize what I just said is true. It's a bubble and it's going to lead to big trouble down the road. So the perfect storm for gold, I've been at this 40 years. This is the perfect storm for the gold market. And there's nothing on the horizon to suggest that there's going to be a break in the weather.
Fast forward 9 months to the present day, and it's fair to say that gold is not just having a great year, but in fact, the world's favorite precious metal has been in one of its best years ever in history. Gold market bulls are locking in bullion prices surging to fresh records, with a milestone of $3,000 per ounce coming into focus, fired up by monetary easing by major central banks and a tight U.S. presidential election race. Gold prices powered higher on Friday, beating record levels, as a boost in bullish momentum fueled by optimism that the U.S. Federal Reserve is on the brink of trimming interest rates, was catalyzed by fund inflows and a drop in the dollar. Peter Grandich discusses his bullish outlook on gold, predicting that its price will soon surpass $3,000 per ounce. Grandich points to the substantial accumulation of gold by central banks and major investors, attributing this trend to global economic and geopolitical uncertainties. He underscores that, in the face of these challenges, gold continues to be a robust investment, offering stability and protection during times of economic volatility and geopolitical tension. Global physically backed gold exchange-traded funds saw a fourth consecutive month of inflows in August, the World Gold Council said last week. Conclusive evidence shows during the period, U.S. national debt has ballooned from $5 trillion to $35 trillion. Gold prices have risen by 8 times since 2000. But here's where things really start to get interesting. If history repeats itself, gold prices could reach $5,000 an ounce when the U.S. national debt hits the $70 trillion mark. Additionally, Grandich highlights the pivotal moment when the Bank of International Settlements, often referred to as the central bank of central banks, elevated gold to a Tier 1 asset alongside stocks. This move signaled central banks' deeper involvement with gold, reinforcing his long-standing bullish stance. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads.
Well, it's really a continuation, a little bit different. I'll mention in a moment about silver, but gold is really just continuing a mega bull market that still to this day, most Americans have not participated in it in any way, shape, or form. It is just huge accumulation continues on the world stage by central banks, by very large investors. As we get to this BRIC meeting, as you know, I've felt that a good reason for the gold's performance over these last few years has been the expectation, and we're probably going to learn a lot more than we learned last year on how far along they are on how they're going to commence their trading and what kind of monetary system or systems they're going to use. We've gotten some indications already where they've spoken about a unit that's going to include about 40% in gold, which is very, very unique. And I always ask this to my don't worry, be happy crowd friends that still work on Wall Street, who, as you know, I believe you can toss them off the Empire State Building and all the way down, they'd all say the same thing. Hey, so far, so good. I ask them, what's causing gold's rise? It's not a speculation. It's not some type of stock and all. What has led to this, and why is it that central banks are such aggressive buyers? And the discussion that doesn't take place a lot, Elijah, I know in your world it does, but in the regular world it doesn't at all. Why did so many countries repatriate so much gold from the United States back to their central banks? Obviously, I think I know what the answer is, because they're preparing for the changes that are coming on the world stage in returns to monetary, but they've also have come to conclude that gold is even a better holding than U.S. securities. That is now actually outperformed the performance of bonds over the last 50 years. And one last thing, Elijah, I know it's a run-on sentence for me here, but people can't forget this. It was a key because gold kind of turned around the same time when the Bank of International Settlements, which is really the central bank's clearing bank, it's the central bank's banker, as some like to call it, when they raised gold to a tier one investment along with stocks. That was an indication back then that the central banks were going to be more involved with the gold, and it continues. So I'll say it again. You know how bullish I've been, and I've said it now in recent weeks when I get interviewed. Gold's going to have a 3 handle with it without ever having a below 2 handle in it. And with us at 2,600, 3,000, it's not that far away. It's not that impossible. So I still retain a very, very bullish stance overall towards it.
The U.S. economy is on relatively solid footing in the second half of 2024. But while inflation has cooled, progress has been choppy and inconsistent. Labor markets have started to loosen, and the Federal Reserve has been cautious about pivoting to interest rate cuts. The bond market is pricing in an 86% chance that rates will fall by at least a full percentage point by the end of the year, potentially stimulating the economy. The S&P 500 rallied in the first half of 2024 as investors cheered resilient earnings growth and anticipated that aggressive Fed rate cuts were just around the corner. Peter Grandich raises concerns about the economy, highlighting flaws in the Bidenomics narrative, especially the employment figures that have been used to showcase the strength of the recovery. He sees these discrepancies as signs of a market bubble and links them to gold's strong performance. According to Grandich, if the stock market and economy were truly as robust as some claim, gold wouldn't be performing so well. Instead, he believes that gold is being sought after by investors who understand the underlying fragility of the market. Now let's redirect our attention to a video.
We had Bidenomics when it was happening, and part of the push behind Bidenomics was an argument that look how strong employment is. Look how it's doing. Forget about it. It's just a lot of it was recovery from COVID. But look at these employment numbers. Look how much we're having. And employment number come out. Everybody say, proves to show you Bidenomics is working. And then they kind of changed it the next month, and this went on and on. And what happened? We got a number out that showed that almost 1 million, and it will be above 1 million when they finally adjust it for the final time. There were 1 million more jobs reported than really was the case. Then I asked people this, okay, if that's the case, and Bidenomics was not as strong, and Harris is part of Bidenomics, the Federal Reserve was making decisions based on that. Throughout the time of their tightening, they said there were 2 main reasons for their tightening: inflation and strong employment. Well, it turns out that one of those 2 factors was way overblown. It wasn't anywhere as strong. So now if that's the case, first you have to say, well, the Federal Reserve really was duped in a sense if they were taking it on face value. And now people, instead of going, wait a minute, we should be even more concerned. Now the stock market's rallying because guess what? This now allows them to give us a 50-point base cut. And that's bullish for stocks. The cup always half full, the spin, even though the underlying factors are getting worse and worse, is how people get trapped in a bubble, how bubbles cause false premises and they build on one another. Real quick example, if you don't mind, there's a real hot technology stock out there that's been involved in artificial intelligence. It's gone up X amount of percent. And the other day, the market was down 700 points right after the debate because people were concerned, oh my God, Harris could win. This could be bad for the economy. And then this guy came out at a conference and said, hey, listen, our customers are just going crazy because we don't even know if we're going to be able to give them everything they need. And the stock market turned on that. Meanwhile, the guy is selling hundreds and hundreds of millions of dollars of his stock. If your customers are doing so good, why would you want to get rid of a stock today that's going to be worth so much more tomorrow based on the implications you're saying of how business is doing? These are one of many, many signs of a bubble. And part of the other sign of the bubble is how well gold's doing, because you would argue if the stock market and the economy is doing it half as good as the don't worry, be happy crowd says it is, gold should not be performing. I believe gold is being used again in part by people who realize what I just said is true. It's a bubble and it's going to lead to big trouble down the road. So the perfect storm for gold, I've been at this 40 years. This is the perfect storm for the gold market. And there's nothing on the horizon to suggest that there's going to be a break in the weather.
Gold futures racked up another new record on Friday, the 34th time this year. And some analysts are saying recent market action suggests a new upward leg for gold prices is underway, sparked by monetary easing from major central banks and a tight U.S. presidential election race. Meanwhile, analysts at Citi believe gold could reach $3,000 an ounce by mid-2025 thanks to lower U.S. interest rates, strong demand from exchange-traded funds, and over-the-counter physical demand. The yellow metal is now up nearly 31% from its February low of $1,984 an ounce. But even more remarkably, gold prices have now chalked up a whopping gain of almost 44% since October. In light of these gold price movements, do you think we are witnessing the beginning of a long-term bull market for gold, or is this just a temporary spike? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.